Just when it looked like the Eurozone crisis was receding, the recovery in the single currency region has stuttered. Gross domestic product was flat in the second quarter of 2014, and even Germany, the Eurozone's biggest economy, contracted.
In the Eurozone, the economy is actually smaller than it was almost 6 years ago. That's not good, and it contrasts with the picture in the US and the UK, where their economies are both now bigger than in the autumn of 2008.
The European Central Bank has been accused of acting too slowly and now faces increasing pressure to undertake full-blown quantitative easing. But after introducing measures in June, such as negative interest rates and a cheap offer of 4-year loans for banks, the ECB could prefer to wait.
The ECB is going to want to see what impact those measures have before determining whether to go for quantitative easing. It'll also be hoping that the euro depreciates, which would provide some lift to the region's exporters and would also perhaps boost inflation. If the data stays as gloomy as it has, then I think the European Central Bank is going to have to undertake quantitative easing either towards the end of this year or early next year. That's going to be politically problematic. Mario Draghi is going to want to get Germany on board for that. It's going to be difficult to get Germany on board, though, if we haven't seen a more credible economic strategy from both Rome and Paris. So a lot now depends on the politics.
The Eurozone still has deep structural issues.
Simon Baptist, chief economist at the Economist Intelligence Unit, doesn't think QE alone is enough. He reckons governments in the Eurozone have to play their part too.
Japan has been doing massive QE for decades, and it's not enough on its own. It can help, it might be needed. We need loose monetary conditions for sure. I don't think what is holding back the Eurozone at the moment is anything to do with the ECB's policy rate. Businesses aren't investing because they don't think the profitable opportunities are there. And part of that is because the business environment in Europe is not attractive at the moment.
The periphery is performing a lot better than it was a few years ago, and that's very heartening. It means we're not in the same sort of crisis scenario that we were. However, it's difficult to see the recovery in the periphery strengthening if growth remains weak in economies such as Germany and France, which together are responsible for more than half of the total Eurozone output.
I think with interest rates at these record lows, this is actually the time for a fiscal stimulus. I think Germany's stance on fiscal issues is completely irrational. Bund yields are below 1%. Germany should be borrowing. It should be investing in something sensible to improve long-term competitiveness. Same goes for countries like France and Italy. And there's a but, which is they've got to combine that with long-term reform so that future government revenue is not compromised by the growing entitlements. This is increasing the retirement age. This is creating better incentives to get people into work.
The Eurozone managed to get through 2013 without any major upheavals. Then earlier this year, the market suggested the Eurozone crisis was almost over when Spanish bond yields fell to pre-crisis levels. But there are now worries that the crisis could be entering a new phase.
The Eurozone is at risk of entering a new crisis, which is one of deflation. But it won't be a sudden crisis like the last one. Deflation is very slow and pernicious, and we've seen in Japan the impact can go on for decades and it can be very hard to break out of. I don't think it's a given that that will happen. I think it is definitely a serious risk. And that's why it's critical that Eurozone governments take the kind of structural reforms that are going to drive high demand in their economies. So freeing up their labour markets, being open to immigration and creating the kind of conditions that means business want to invest. And because those impacts will take time to come through, that's why the government needs to step in the short term with some fiscal stimulus. And sure, the European Central Bank can also take a role in that.
This week's data in the Eurozone point to potential deflation and stagnation. The political will to keep the Eurozone together so far has been strong, but that'll be tested as the ECB and Eurozone governments come under pressure to take bolder and more aggressive moves to help the economic region back to long-term health. Daniel Garrahan, Financial Times.